Hi YouTube, this is Matthew Record. Thank you for checking out my channel. Please hit the like and the subscribe button. It helps out a lot. It helps out the YouTube algorithm. Please, it helps out the channel. It helps out everything. The like and subscribes does a lot. So here we go. We're watching Graham Stephan and the Graham Stephan show here. I'm watching his YouTube channel right now. This video that we're reacting to is about stocks versus real estate. Why you should not buy a house in 2025. Here we go.
Here you go. A few weeks ago, Shelby Church posted this video about what does better, 5 years in stocks versus 5 years in real estate. Honestly, after watching her video and seeing some of her really shocking numbers, I was inspired to look through my own portfolio to see exactly how much I've made in stocks versus real estate, how they compare, and what this means for the average person watching. Because I have a feeling it's probably not what you're expecting. And if I could save a few people from making a really big mistake, then this entire video is 100% worth it. Although before we start, as usual, if you appreciate videos like this, all I ask for in return is that you hit the like button or subscribe. Plus, I'm going to be linking to Shelby's video down below in the description for anyone who wants to follow along. So thanks so much, and also a big thank you to Public.com for sponsoring today's video, but more on that later. Alright, so first, let's talk about how much money I've made from real estate. I hate to say it, but for most people, this is going to be completely dependent on when and where you bought your home. Because as you're about to see, you could either make a ton of money or you're going to be completely fucked. In my case, the first property I purchased was back in 2012 as a bank-owned foreclosure in San Bernardino County for $59,500. Yeah, seriously. I bought it outright in cash with money that I had saved up for 4 years working as a real estate agent. I then spent another $12,000 fixing it up, and it's currently worth about $400,000, while earning about $1,500 in net rental income every single month. From there were 2 other properties that I bought and recently sold with nearly identical returns. And over the years, I just kept saving up my money until 2016, where I bought another property in West Los Angeles for $780,000. In terms of numbers, I was able to buy it with about $150,000 down, and I got a 30-year fixed-rate mortgage at 3.375%, and then I spent another $60,000 fixing it up. As a result of that, I made about a 280% return on my money, while also earning about $150,000 in rental income over the last 5 years. From there, though, the returns do get a little bit more difficult to calculate. For instance, in 2017, I purchased a duplex in mid-city Los Angeles for $585,000. I've spent a total of $220,000 fixing up both units, and now I'd say it's currently worth about $1.2 million. But in 2018, I was able to do a cash-out refinance to pull out all of my initial investment while locking in a 30-year mortgage at 3.75%. This means I have none of my own money in the deal.
This guy is super smart. He knows what he's doing. He's done the bookwork. He's read it, and he's really smart because he became a real estate agent before he actually started getting into real estate himself. He did the job before he became the business owner. He made sure he knew everything inside and out, and that's the smart thing about Graham Stephan. I'm a huge and big Graham Stephan fan. I've been watching him since I was 19 years old, which is about 4 or 5 years ago. So I've been watching him for a while. But one thing about Graham Stephan is he's smart, and he got into real estate as a real estate agent. Worked his way up, saved this money, and just played the game, and it worked out for him. But if you don't know what you're doing, if you don't know anything, it can be very problematic. It can lead to sticky situations that most people don't want to be in. And it can lead to dead ends, meaning like your real estate career might end because you failed to do this, you failed to do that, or you had to go bankrupt, stuff like that. So
side is pure profit, and I've made about $120,000 in rents since 2020. I also did something similar with another duplex that was located down the street. I bought it for $815,000, I put 15% down, and I later rented it out, and now it's worth about $1,150,000. When you add all of this up, purely from an investment standpoint, with properties that were purchased to renovate and later rent out, I have $643,000 of my own money invested for a total value increase of $1,843,000, which equates to a 281% return, not including any rental income. But keep in mind, all of this was over the last 10 years, so how have they done over the last 5 years? Well, here's where things get interesting. Despite what you might think, my home values in Los Angeles County did not see that much appreciation over the last few years. I mean, sure, values certainly did go a bit higher, but it's probably not as much as you would expect. For instance, my first home was worth roughly $300,000 before COVID, and now it's worth about $400,000 5 years later, for a 33% total increase. The second property was worth about $1.2 million before COVID, and now it's worth about $1.4, a 16% increase.
Here's the thing about Graham Stephan. This guy knows what he's doing, but not only that, he's had to grind and hustle. He had to manage his money, and he was wise with his money. It's not like, see, a lot of millennials and all the younger generation, the X generation, we say that we manage our money, and there's a lot of people that do make a lot of money out there, don't get me wrong, but 90% of the people out there just don't know how to budget their money. They just don't know how to budget. They don't know how to, okay, this money's going here, this money's going there, this money's going here, and then this amount of money is going to savings. People don't do that. People see something, they're like, oh, I got money, buy it. And this guy's not like that. I've seen a lot of his videos. This guy started out like as a penny pincher, bro. He did not start out with a whole bunch. He didn't inherit a whole bunch of money. This is money that he stacked to the side. Every paycheck, he put money to the side so that he can do stuff like this. So he can make money moves and benefit from it. And this is just the results of his labor. He put in the work, and it took him years, but he built a real estate empire basically for himself. A big egg nest, and that's what a lot of people should do. They should put their money to the side, hustle, grind. That's what you're here to do when you're young. He's, 30-something years old now, and he has millions. You gotta see the work, though, it took to get to that point. So,
for 5 years. The third property, a duplex, was worth about $1 million before COVID, and now it's worth about 1.2, a 20% return. And the last duplex was worth about $950,000 before COVID, and now it's worth $1,150,000, which is a similar 20% return over 5 years. Now, sure, I was able to collect rental income on top of this, but I'm also very fortunate to have locked in record low mortgage rates at a record low property tax basis with low down payments. And I'll be honest, if I didn't have all of these factors working in my favor, I just don't think it would have been sustainable. I mean, just consider this. Over the last few years, my home insurance rates have gone up about 35 to 40%. My property taxes have gone up about 15%. My labor and material cost has gone up 50 to 100%. And if I were to buy any of these properties today, I would be losing a substantial amount of money. Like, let's take the example of my first property. If you bought that today at $380,000, you'd put 15% down and get a 30-year fixed rate loan at 7%. Your monthly payment would be $2,148 a month, which is already significantly higher than what I'm getting in rent. But on top of that, you would also have property taxes at $375 a month, home insurance at $125 a month, and repairs and maintenance at $150 a month. All of a sudden, you're now spending $2,900 a month for a property that you could rent for $1,950 a month. So even though real estate has been a really good investment, at today's prices, the numbers just don't pencil out. Although with stocks also at record highs, how much would I have made had I just thrown it all in an index fund instead? Although before we go into that, this is a perfect example of why it's so important to have as much information at your disposal as possible. For example, when it comes to building wealth, studies show that lump sum investing beats dollar cost averaging 68% of the time, and holding cash underperforms investing 69% of the time. That's why our sponsor, Public, wants to help you start the new year with your best foot forward. For those unaware, Public.com is a platform that helps you build a multi-asset investment portfolio of stocks, bonds, options, treasuries, crypto, ETFs, and more all in one place. With their seamlessly designed interface, Public also makes it extremely easy to research more information than you ever thought was possible while making decisions about your investments. You can also get quick access regular basis, creating a seamless set it and forget it approach to investing.
Yeah.
Or if you're the type of person who likes watching dividends, they have a dedicated income hub where page it's intuitive to navigate years. So if you're interested in checking them out, 5 minutes, thank you so much, and now let's get back to the video. Alright, so in terms of how much money I made in stocks versus real estate, here's what you came for. Overall, on any deals that were purchased on or before 2018, the real estate investments actually outperformed the stock market by about 20 to 50%, not including rents. Normally, I just go over each of these one by one, but because I'm really worried it's going to be a long-winded analysis and some people are going to get bored and click off, I'm just going to put it on the screen here, and you can pause the video if you want to break it down. Anyway, for anything purchased on or after 2020, things are a bit mixed. For example, I bought a home in West Los Angeles that underperformed the stock market by about 35%, but my purchase in Las Vegas overperformed the markets by about 100%. Basically, the stock market has been on an absolute tear since COVID, and even when you account for low down payments and low mortgage rates, stocks overall still did better. Although for anything purchased on or after 2021, the real estate winner effect tends to make a lot less sense. Look, as someone
Here's the thing. Real estate's not bad to get into. Don't get me wrong. There's rewards, there's benefits to getting into that. But it's so much easier now. Nowadays, it is so much easier just to buy stock in a company. It is so easy to become a part ownership of a company nowadays. Nowadays you sign up for an account, you load it up with money, and you just buy stock. You just click a button. It's so easy, it's not even funny. Back in the Warren Buffett days, it was really difficult just to buy a stock. You had to have the money, and you had to have the money at the share price that you can buy shares. If you buy a share of stock, or you might buy many shares of stocks. Okay? And a lot of times it was like a couple $100 just for a share. And so, or when you bought bonds, you didn't have ETFs. You had a bond, and you had to pay the full price, which was probably around $1,000 just to get into a bond. Less things said, it's easier nowadays to get into the markets. And if you have a lot of money, if you made a lot of money, and you're just trying to store your money somewhere, savings account's not bad, like a high yield savings account, but even better, the stock market. If you choose an S&P 500 index, for an example, the S&P 500 index, the past 3 years, has outperformed real estate largely. It's gotten over 20% per year in the past 3 years. Just an example of that. If you had $1 million in the S&P 500, you would have made over $200,000 per year just by having your money sitting in the S&P 500. Think about that. For all the people that are making over $100,000 a year, think about that. For people that are making $50,000 a year, think about that. If you just saved 20% of your income and stored it in that, within 10 years, you'd be a millionaire. Or close to it. Dude, it's insane. And the fact of the matter is, you get a greater return. It's not safe, but it's a lot safer than real estate. But this is what he's saying. Stocks are better than real estate. It's easier than real estate. It's not as hard as real estate. It doesn't take as much effort and front up investment as real estate. That's what he's trying to say here.
Full-time in real estate since 2008, I'm the type to carefully look over the numbers, look at the risk of any deal, and then compare that to every other investment that I could possibly make. And even though real estate made a lot of sense when interest rates were low, once prices started skyrocketing and interest rates rose, I started pulling back and invested my money in index funds instead. The reality is, nationally, home prices have risen 47% since the start of the pandemic, during a time when the stock market has risen 124%. So is this then confirmed that stocks have been better? Well, it really just depends on how you look at the data. In this case, most people aren't buying their homes outright in cash, and instead they're getting a loan from the bank for the difference, meaning for every $20,000 they put down, they could get a loan for $80,000. This is why for the average person who bought their home in 2020 with 20% down, their initial down payment has increased in value by 235%. And if that sounds confusing, just consider this. Let's just say you buy a $100,000 home with an $80,000 loan for $20,000 down. Now, 5 years later, the home is worth $147,000. This means your $20,000 investment is now worth $67,000, allowing you to have tripled your down payment. Of course, there are other aspects to consider, like the interest rate on the $80,000 loan, property taxes, insurance, and repairs, which probably amount to an additional 7 to 8% a year of total value. But the point still remains. Leveraged real estate at a sub 4% interest rate purchased before 2020 has so far outperformed the stock market by a very wide margin in most areas. However, more recently, things aren't looking as good. For example, if you bought a home in 2022 with a 6.5% interest rate, the cost of borrowing money just becomes too high to offset the benefits of leverage. Like, just take this as an example. You buy a $100,000 home, $20,000 down with an $80,000 loan at 6.5%. Even though the market has gone up by an average of 5% a year during that time frame, you're paying 6.5% for the cost of keeping a mortgage, completely wiping out nearly all of the benefits.
Here's the thing, though. You don't have to have tenants. You see, with real estate, you have to have tenants. You have to have good credit. You have to have a high credit score. You have to have, good reputation. Right? You have to have the right connections, the right banks to hook up with. With stocks, you just buy a stock and you're guaranteed an average return of certain so-and-so. So buying stocks is way easier to get into than real estate. Yeah, real estate does outperform the stock market by a certain amount, but it's not as easy to get into. Stock market, you still got to put in work. You still got to study. You still got to do your analyst research. You got to look at the analytics. You can't just put it in there and think it's going to go somewhere. It's not gold, okay? It is companies that you're buying into that you got to do your research. But if you buy low, sell high, and you invest in the long term when it comes to stocks, 90% of the time you're going to win. You're going to win. It's easy money. And you just got to put it. Money makes money, and that's true. But skill also makes money. But when you're getting into stocks, it's so easy. It's easy. You just got to do it. It's discipline, really. And well, that's going to be it for my video today. Thank you so much for watching. Please, again, hit the like, hit the subscribe button, and comment in the chat, because I want to see the comments. I'll check out the comments daily to see how everything's doing. But yeah, just hit the like, hit the subscribe. Thank you so much. Have a blessed one.